Okay, it says recording has started, so think um, I think we can get going, and then at the end we'll know if it's arrived successfully.
Well, I hope Kailash can eliminate all this.
Yeah.
Okay, here we go. Hello, everyone. This is a brief recorded discussion on the sugar market between Mr. Stephan Geldart, the sugar analyst of Zarnico, probably the most respected analyst in the business, and myself, Robin Shaw, the sugar analyst at Marex Sugar Brokers. Obviously, the main components of any market are supply and demand. And we decided to keep it short. We would really tackle the extremely difficult question of sugar demand at the moment. Is there some demand destruction caused by the higher price? And then we'll move on to discuss if there are any quick ways where supply could be expanded. So here goes on demand. As a rule of thumb, Stephan, do you think that that sugar is price inelastic?
Hello, Robin, and hello, everyone. It's a really good question because I think largely it is. I think a lot of consumers in a lot of countries around the world aren't terribly aware of how much they pay for their sugar. So especially if you look in countries where a lot of the sugar is consumed in ready-made products, the sugar cost of those the consumer doesn't really see, and so I think the consumption continues whether or not the sugar price is high. Where you have countries where a lot of sugar is bought as sugar and then the foods are made within the household, I think then maybe there is a bit more sensitivity to price. People do notice when sugar prices go up and may adapt, but there aren't really that many household replacements for sugar. And the other thing I just mentioned, I know you're interested in this one too, Robin, is that we always look at sugar prices in isolation. So if the price of sugar goes up, the natural tendency is to think that consumption must be affected. But for the past year or so, all food prices have gone up. And so for a lot of consumers, if all of the foods they buy have increased in price, then rather than cutting back on sugar, they may well cut back on luxury items which cost more, like meat. And that could then mean actually there's more household budget to allocate to cheaper carbohydrates, and so sugar may benefit. So from my point of view, every country is different, but I tend to think that the way sugar consumption responds to price is unusual. There's not a linear relationship. Does that match your thinking?
Totally. I think I can add a few points going in the same direction. Firstly, I reckon that less than half of the world's population actually is suffering the increase in food prices, because in India, Europe, USA, and to some extent China, the price of sugar, the domestic price, is isolated from the world price. And secondly, something that struck me very forcibly was the world war on sugar, the general consensus that it was important to cut down on sugar consumption per person, right or wrong, and I actually think it's probably right. That began sometime around 2014. As far as we can see, up till 2014, world sugar consumption was growing pretty regularly at about 2%, which was slightly above world population. Now, as far as we can see, since 2014, consumption has been growing at approximately 1% per annum. And again, it was upset by COVID, but I think that's been a fairly straight line. And that tells me that despite the huge efforts, despite publicity, despite, above all, the big food manufacturers making a big virtue of reducing sugar content in their products, it hasn't made much. The only effect has been to reduce it by approximately 1% per annum. So I think it's the truth is that consumption is extraordinarily inelastic, and I even come to the conclusion that sugar intake is more of a habit, like smoking or drinking, than a food. As you say, because there isn't an alternative, you can't reach for something else. I mean, if you were a manufacturer, you might cut down on sugar and put other products in, but that takes a huge amount of effort. You have to change your labeling, and I simply don't think it's happening. As simple as that.
I would just add on that, Robin, as well. One interesting thing on sugar is that quite often, as far as I can tell, consumption tends to be quite social. People eat sugar a lot at celebrations, for example. If you go to a birthday, you might expect to have birthday cake, or at a wedding celebration, there may be a wedding cake. And so part of eating sugar in a lot of countries is that there's a social element to it. You do it when you're celebrating, you do it when you're with friends. You know, if you go out to a sports event with friends, and you may end up having a soft drink while you're watching the sports, for example. And then also what people say they do and what people actually do are two different things. And so I'm sure if you asked a lot of people around the world, are you cutting your sugar consumption? The answer would be yes. If you then looked at that person's diet over the last 10 years and tried to see if there's any major change in sugar consumption, the answer would probably be no.
Yes. So to sum up, I think on demand, we don't think there's been a material change due to price. Of course, we mustn't exaggerate. Sugar will have lost some demand to high fructose corn syrup, notably recently in Vietnam, where it seems to have gone up by high fructose consumption seems to have gone up by 200,000 tons a year at the expense of sugar. And then for the manufacture of MSG, manufacturers have switched to using other products than sugar as their raw material. But I think that's already happened. And I think the switch to HF, high fructose corn syrup, has to a large extent already happened. So I think our conclusion has to be that the solution to the deficit, if we are facing a worldwide sugar deficit, is not going to come from demand. It's got to come from supply. So rapid increase in supply, Stephen, where can you see as candidate countries that might be able to increase production significantly in the coming year?
I think your question frames it right, because really, if we're looking at having a couple of million tons shortfall in production every year, then you have to look at the big sugar producing countries to make the difference. Based on our statistics, in 2022-2023, we had a 3 million ton sugar production shortfall. This season that's just finishing, a 1.2 million ton shortfall, and the next year a 2.2 million ton shortfall. So cumulatively across the 3 years, we're talking about having 6-7 million tons production deficits. So really, that calls for the big countries to increase their output to overcome that. You can't really do that with smaller producing countries. One thing that worries me is that sugar prices have been rising for 3 years now, and they've been at around or above 20 cents for more than a year. And 20 cents per pound historically is a high price for sugar. And if you look around the world, the only two countries that I can see that are really trying to expand cane or beet acreage in a meaningful way are Brazil and India. If you look at China, Chinese sugar production is stuck at 9-10 million tons a year. Thailand this year will probably harvest 65 to 70 million tons of cane, which is half what it's done at its peak. Europe is still stuck at somewhere between 15 and 16 million tons of sugar production. These are all big countries that could make a difference, but we're not seeing the growth, even though sugar prices have risen for 3 years. So for me, that's a major worry. And then, of course, in India, we're seeing increasing cane acreage, but also with that increase in cane acreage, more sensitivity to the weather. So for me, if I'm looking at where we're going to get the production response, we're already seeing it in Brazil and India. It's not really coming through to the world market yet, but it will in due course. So I'm then looking at places like Europe, where in theory, beet farmers should be able to respond quickly to changes in price. And I'm wondering what conditions will make Europe grow. Likewise in China, likewise in Thailand. It's got to be those countries that contribute, and high prices are part of the picture. But also, I think you need high prices to be sustained for long enough to farmers and for policymakers to get the right signals to encourage cane and beet to be grown. I think that's one of the missing components at the moment.
I think you're absolutely right about Europe. Of course, beet, you can sow beet next spring, harvest it next autumn, and you've got sugar at the end of the year. So that could be a rapid response. I think Russia could expand a bit as one of the few beet countries. US and China are completely cut off from the world market. So that really does leave Europe. And they're probably making money if they export sugar today. Would you agree with that? Just about, not much.
I think so. I think you'll see the harvest that's just starting. I think you'll see an increase in exports from Europe this year compared to what we've seen last year. So I think that's true.
Right. So they're just about making money exporting on the basis of current world market. That comes. I would make two caveats about whether Europe is likely to expand. Firstly, last year up till now, really, the price in Europe has been €1,000 a ton. That's $1,100. And they've been making, I reckon, something like 350 euros per ton. And that's because of their relatively low beet area, which was caused by the ban on neonics insecticide, and by the historic low yields that they've had for the last 2 or 3 years. Production in Europe came down, and that caused imports into Europe to increase. And that, in a rather complicated manner, once you get above 2.5–3 million tons of imports into Europe, you begin to knock on the door of paying full import duty, which is 350 euros. So if they lose that, if they increase production, they're going to literally lose 350 euros per ton. And therefore, I think they will hesitate before they radically increase production. And the other thing is, they all have in their memories 2017, where they planted in order to export. The world price collapsed. They hadn't hedged sufficiently, and they ended up really getting in financial difficulties. And that was all caused by flooding their own market with too much sugar. And the price of sugar in Europe fell from 700 euros to 300 euros between 2016 and 2018. So I think those two inhibitions will mean that Europe, if they increase anything, will do it only to a moderate extent. We might see an extra 1 million tons of production. Does that make sense to you?
It does, and I think it's quite telling, Robin, as well, that if you look at the two biggest beet growers in Europe, they're France and Germany. And in the last couple of weeks, the two big French processors have made press releases. So the first big French grower said that they wanted their farmers to expand beet acreage because their price was high and because there's a shortfall of sugar production. And so it was in the farmers' interest to make sure that there was sugar supply while the prices were high, which made perfect sense. The other big French beet processor said they didn't want their farmers to plant any more beet because they're worried about Ukrainian sugar supply coming into Europe and actually sending the prices lower. So I think that kind of confusion is mirrored across the whole continent. I think a lot of the beet processors in Europe are extremely worried about anything which would significantly reduce domestic prices, because that's where the beet processors make most of their returns, is on the European market.
Right. So to sum up so far, we don't believe that demand will be cut. We don't believe that supply will be increased. We're on track for what looks like a continuation of a bull market. I think the last point that you and I wanted to cover was the statistical situation. Are we facing a very, very considerable deficit, or is it something where an extra couple of million tons of production, a little bit of demand lost, 3 or 4 million tons of statistical change could solve the problem? And I think statistically, you have a pretty clear picture that we've been in deficit for some time, and that cumulative deficit must be growing.
Yes. So the first thing I'd say is that whenever you're in a bull market, they are extremely volatile. So at some point in the next 15 months, I think we'll have a lot higher prices, but I can't tell you exactly when. The second thing I think you and I both agree is that global sugar stocks have been drawn down. Stocks today are lower than they have been at any point, at least in the last 5 years. And then if I look at consumption, our own statistics say that global sugar consumption is around 180 million tons this year. And there's only been 1 year in history where global sugar production has been above 180 million tons, and that was in 2017, 2018. Every other year, we've been below 180 million tons. So we really do need to see, after a decade of low investment in the sugar sector, we need to see much more investment coming into sugar production around the world. And that needs to be in places like Brazil and India. And then not only that, we need a means of getting that sugar to where it's needed. So in Brazil, we can see production growth. It's likely that either this year or next year, Brazil will make 40 million tons of sugar for the first time. But we also need to have the infrastructure available to get that sugar from upcountry to the ports and to the countries where it's needed. So from my point of view, the whole point of having higher sugar prices is to encourage that investment in sugar production around the world, encourage that investment in sugar infrastructure around the world to get the sugar to where it's needed. And with stocks being so low around the world, the market doesn't have any sort of safety net. There's no cushion. If there's any more disruptions anywhere around the world, then people can't keep drawing down stock to get themselves through. So for me, that points towards sustained higher prices. I said a few minutes ago that being above 20 cents was quite a rare event for sugar, but I think it's likely, at least for the next 15 months, that we stay above or near that level to try to get the investment we need to correct the problems we've got, which is 10 years of underinvestment in all commodities.
Great. And so last point from me, you mentioned lower stocks. That gives me the opportunity, the excuse to preach my favorite theory about sugar at the moment, which is that if you look back in the last 3 years, 3 years ago, Indian ending stocks were 11.2 million tons. We think this year they're going to be below 5. So we've lost 7 million tons of stock. We reckon the same thing has happened in China to the tune of 3 million tons. So we've already got 10 million tons of destocking in the last 3 years, quite clearly there. Nothing to do with the world price, really quite sort of accidental, owing to the particular situations of India and China. And then in the last year, we were in an inverse market. In other words, the nearby prices were higher than the distant prices. And therefore, anybody who had any stock was being paid to get rid of it and replace it later on. So I think you can bank on the fact that there were probably something like 15 million tons of destocking that took place in the last 3 years. That means automatically that production in those same 3 years has been running 15 million tons below consumption. That means in turn that in the coming 3 years, we've got to do the opposite to get back to where we were. We don't just need to stay where we were and have a similar production and consumption. We actually need to rebuild stocks. And if we don't, we will continue in deficit, and the deficit will get worse. So I think that does give you a picture of the fact that we have quite a big problem to solve, and therefore I think we need to stay not at 20 cents, but at prices sufficiently high. And I would say they're sort of around present prices, 26 cents and above, to get us out of this deficit. We will get out I think the easy path will be via extra crystallization capacity in Brazil, but I think it's going to need high prices to make us do that. Would you agree with that as summing up of our joint thinking?
Yes. Yes, but as I say, I think in the next 15 months we will have higher sugar prices than we have today. It's just, as I said, bull markets are always horrendously volatile. I'm sure you remember, Robin, as well as I do, that when in the 2009 to 2011 bull market, we went to 30 cents first and then collapsed all the way to 13 before finally then getting to 36 cents, which was gut-wrenching for everyone involved. Just to be aware that higher prices, I think, are likely in the sugar market, but the route that we get there will probably be difficult to manage. So I guess everybody just needs to be aware of that risk.
I totally agree, and it's written on the X-rays will show it when they autopsy me. But I would just add that I think this year slightly different. I think there is pent-up buying, real buying, Indonesia, China, etc. Under the market. I can't say where, but I would certainly put it somewhere around anything below 24 cents. I think would have the extremely bullish effect of allowing all those consumers who got behind in their buying to fill up again. So I think the as usual, the most bullish thing that could happen would be a price collapse, but I don't think it's going to be as big as it was in 2010. So I think we've covered what we wanted to cover, and hope it was of use to you, the listeners. Goodbye from both of us. There, finish.
Excellent. So I've